Hello traders and welcome to another video review. Today is Thursday, August 10th, 2023. Let's find out what's going on the Forex economic calendar today. It looks like the busy day during the New York session because we have plenty of the data related to the CPI scheduled for release at 2:30. So core CPI from the US, CPI and the other measure of the CPI are all scheduled at 2:30 together with the initial jobless claims. This time the CPI is expected to stay in the line at the level of 0.2%, and the yearly CPI is expected to increase from 3% to 3.3%. The initial jobless claims, as you can see, are expected to increase from 227,000 to 230,000. So those are the key important data for today. All of them are from the US, so maybe let's take a look at the US dollar related pairs. Today we are going to start, of course, with the euro dollar. The euro dollar 4-hour time frame chart starts to build a triangle pattern. The reason for that is that the recent price action, maybe even not that recent, but the one from the beginning of the very beginning of the August, looks like this. It might be some sort of the bigger, let's say, bigger triangle in progress. So right now it looks like this, and as you can see, the lower triangle arm can be located here. So it's a little bit skewed triangle. It's not like a textbook example of a triangle whatsoever. Nevertheless, it's still valid. It's still valid, and the reason for the triangle to be in this place after the correction to the downside is that the triangle is the pattern continuation. Okay, it's a trend continuation pattern. So we should expect the market to move lower after the breakout from this pattern. Moreover, we are still trading below this zone here, which is apparently a sort of the supply zone. Of course, this zone is located between 1.1022 and let's say 1.1048. okay, so as long as we trade below this zone, there is no chance for the bulls to move higher, because every move here, as you can see, has been capped. So the outlook remains rather horizontal to bearish for the euro dollar in the coming, let's say, in the coming hours, maybe even to the end of the week. However, any data, especially fundamental data, that are not in line with the the general consensus and the market participants' expectations, might trigger strong move, preferably of course to the downside. But if there is a breakout above 1.1048, this triangle pattern gets invalidated. So please keep an eye on the current developments on the euro dollar. The other pair we are going to take a look at is, of course, the US dollar to the Swiss franc. And this situation is a little bit even more deceiving. Why? Because we got this level here, which is the technical resistance, and let me just move it out here and make it bigger. There you go. This is the level of was 8,730, and the others, the local swing high is located at 8,804. So this is now technical resistance. It's obvious, but this level here again starts to look like a kind of a triangle as well, because you can see this movement here, and you can see this situation here. So first there was a move to the downside, then we got the consolidation, and the bulls are unable to apparently move above the 8,781. So another another indication of the building up triangle, and then the breakout is of course expected to the downside. Where is the next target for the bulls? Of course, there is very important local technical support. It's obvious that it's located at the level of 8,699 pips. However, there is other technical support. One is at 6,660, and there is one more technical support which is important because it's a swing low at 8,551. So for now, as you can see, the target might be, of course, 8,698, but then the more probable target is 8,660 as the measurement of the breakout down from the triangle. Only a strong breakout above 8,804 pips might invalidate this possible triangle formation. Momentum is barely positive. 53.27 points. It's like we just here by the because we get used to be above the level of 50, so any breakout below the neutral level of 50 will, especially on the 4-hour time frame chart, will be the first confirmation of the incoming bearish development. So that's the US dollar to the Swiss franc. Let's take a look at the US dollar to the Canadian dollar. So we talked about it, I guess, not that long ago. So what do we have here is, of course, a very nice bearish engulfing pattern. So we might take a look at the 1.35 as the, of course, technical resistance level. So we got this. Now we are continuing to move lower because we are now testing the technical support at 1.3398. And if there is a breakout, then we should continue lower towards this extreme level at 1.3386, which is now working as the technical support. So we got, of course, this bearish divergence here. Now the divergence starts to work. 51.20, this is the newest reading of the RSI. So we are approaching the level of 50, and it looks like any breakout here below the level of 1.3386 would likely extend the drop in the momentum towards the extremely oversold levels, and will extend the drop here towards at least the level of 1.3305, which is, of course, the 100 periods moving average on the 4-hour chart. This might be very interesting level, so please keep an eye on it. And again, the US dollar is under the pressure, so the outlook remains bearish. And the US dollar to the Japanese yen, this is something different here because this market has been building up a corrective structure to the upside, and as you can see, this corrective structure to the upside just recently broke above the level of 143.90. so local high was made at 1.4411, and and currently the market is testing the breakout level. So everything looks fine and dandy. However, we hit the extremely overbought market conditions on a 4-hour chart of the US dollar to the Japanese yen. So right now the market is apparently ready to move lower, to pull back lower. What are the possible levels for this market to pull back lower? 143.44 is one of them. The other one is 1.42.96, and one more for you guys is, of course, well, now the lows around the level of, let's say, maybe the old one will work as well. 141.96 are the levels to pay attention as well. So that's the current situation. If this candle will cover the newest one, let me just zoom in so you guys can see it clearer. If this red one will cover the previous candle, we have the bearish engulfing pattern, and then, of course, there is a room to the downside. There is a room to the downside to be tested. One of these levels will be the target for the pullback. And last but not least, US dollar index. What is going on there? As you can see, the breakout above the level of 50 periods moving average on a 4-hour chart has been neglected. So there is a rejection and reversal. Let's just zoom in here. So there is rejection, there is a reversal, very strong down movement. We are below the level of 50 on the RSI already, 46.55, and eventually the next target might be 101.94 or even the local low at 101.71. So we broke below this trend line, as you can see. So this is the short-term trend line. We broke below this. It's not maybe perfect, but it's still there. And there you go. We broke below this trend line. We're moving lower. 102.81 is still the swing high made during the bearish divergence. And as you can see, the momentum keeps moving lower and lower and lower. Market is still approaching this level. 102.77 was the last high made on the, definitely different momentum, which is why there's strong reaction to the downside, bounce from the local trend line, inability of the bulls to move above the 50 periods moving average, and then extension to the downside. Now it is happening. So the outlook for the US dollar remains bearish. Those are the local technical support levels. Overall, all in all, the US dollar is being sold across the board this morning. The outlook remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.